What if you could get a 40-year, time-tested market playbook put right in your hands? Well, that's exactly what we're doing today. We're breaking down the wisdom of veteran investor Basant Beheti into simple, powerful strategies that he used to build serious wealth. Let's dive in.
Okay, this is the single most important idea you need to get your head around. Beheti's whole philosophy is that long-term success isn't really about complicated charts or having some secret information. Nope, it's about mastering your own mind. It's all about your temperament, your patience, and getting a handle on the fear that knocks most investors out of the game.
So, here's our game plan. We're going to start with the foundation, the stuff you absolutely have to do before buying a single stock. Then we'll get into Beheti's signature methods for spotting real value, dodging the hype, and mastering the art of just holding on for those huge long-term wins.
Look, before you even dream about making money, you have to protect the money you already have. Beheti is absolutely insistent on this. You must build a financial fortress around yourself and your family. I know, it's not the sexy part of investing, but trust me, it is the most important.
And here are the non-negotiables. Step 1, medical insurance. You just can't let one health emergency wipe out your entire financial life. Step 2, term life insurance. And his rule of thumb here is huge. Aim for coverage that's 20 times your annual salary. It's only after those two shields are up that you can even think about step 3, investing.
All right, so how much money should you actually put into the stock market? Beheti keeps it super simple with this formula. 100 minus your age. That's it. So if you're 30 years old, 70% of your savings can go into stocks. And the other 30%? That goes into safer stuff, like gold or fixed deposits. That's your emergency cash, so you never, ever have to sell your stocks at the worst possible time.
And now we get to Beheti's signature move. This is the strategy he designed to win that 80% psychological battle we were just talking about. It's a genius way to completely take the fear of losing money off the table, which frees you up to hold on for those truly massive long-term returns.
So here's how it works. You find a fantastic company, but you buy it when it's going through a bit of a rough patch. You invest a little bit each week for about 6 months to get a good average price. Then you wait. Once the stock doubles, boom, you sell half of your shares. Just like that, you've got your entire initial investment back in your pocket. The shares you have left are now, psychologically, free. And it becomes so much easier to hold on to them for the next 10 years and let them really grow.
Oh man, we've all been there, right? That FOMO, the fear of missing out on a hot new IPO. Everyone's talking about it, it feels like a sure thing, but Beheti has a dead simple rule to keep you from getting burned by all that marketing hype. And his discipline on this is just absolute. Get this, in his entire 40-year career, he has never, not once, applied for an IPO. Why? Because when a company first goes public, its price is all about hype and marketing, not solid business fundamentals. By just waiting 3 years, you let all that smoke clear and you let the market figure out what the company's really worth.
And this right here just puts it all into perspective. It's kind of wild. When the Paytm IPO launched, it was valued at a crazy 1.5 lakh crore rupees without any real path to making a profit. At that exact same moment, you could have bought almost all of the Mahindra Group's mid-cap companies, proven businesses with actual track records for just 25,000 crore. It just shows you how disconnected hype can be from real value.
Okay, so that free of cost method is an amazing tool, but it's totally useless without the main ingredient, patience. And Beheti's own stories show just how powerful this combination is. It can turn a market crash, or even just a period of boredom, into returns that can literally change your life.
Just take his investment in the Bombay Stock Exchange, BSE. Back in the 2020 market crash when everyone was panicking, he bought the stock. His thinking was simple. The world might be in chaos, but the stock exchange itself isn't going anywhere. Sure enough, it doubled, he sold half to make it free of cost, and then he just held on. In only 4 years, that investment turned into an incredible 70 times return.
But patience isn't just about waiting out a crash. Sometimes it's about holding on when your stock is just boring. He bought a Power Industries in 2020, and for 2 solid years, it did nothing. It went nowhere while other stocks were flying. So many people would have just given up and sold. He held on, made it free of cost when it finally doubled, and was rewarded big time when it eventually shot through the roof.
And you always hear that you can't time the market. And from day to day, that's probably true. But Beheti thinks you can time it, if you think in terms of seasons, not days. He has this simple, almost poetic rhythm he follows throughout the year. So here's the cycle. January and February,
Markets are often a bit high, so it's a good time to take some profits off the table. March often brings what he calls the annual sale, because end of financial year selling can create some nice dips to buy into. From April to September, you just steadily buy a little bit every week. And then finally, November and December during the holiday rallies, that's a good time to plan your exits. It's a simple, repeatable rhythm for the whole year.
All right, we've covered a ton of ground. So let's boil this entire 40-year playbook down to its absolute core, the stuff you can start using right away.
Let's bring it all home. Number 1, master your psychology. That's 80% of the game. Number 2, build your financial fortress with insurance before you invest a single rupee. 3, use that free-of-cost method so you can invest without fear. 4, stay disciplined and just avoid the IPO hype with the 3-year rule. 5, never forget that patience isn't just a virtue, it's your most profitable strategy. And finally, number 6, think about the market in seasons, not seconds.
You know, this entire playbook is built on decades of what actually works in the real world. It's not theory. It's a practical, psychological way to build wealth. It really challenges us to stop worrying about the next hot stock and start focusing on building the right mindset. So after hearing all this and thinking about your own investing, what's the one rule you're going to change?